All right. Good afternoon, and happy Tuesday. Elaine Proby here, CEO of PROBY'S Tax and Accounting, and tips from Elaine's desk. Welcome back. All right. Top of the week here, guys. We are going to be talking today about 3 tax implications for your business. Things that most people get a little confused. There's so many different types of taxes. Today, I just want to talk about 3 of the main taxes that people get confused. I want to get some clarification today for you guys so that it makes your life a little bit easier. A lot of times people want to know why, if they pay one type of taxes, why do they have to pay the other type of taxes? Well, there are different taxes for different reasons, for different things. And I want to make sure that you guys understand that today. Okay, so for those of you who are in business, there are different types of business taxes. There are different implications based on what type of business that you have. And I will attempt to clarify those today. So the first point I want to discuss, guys, is the income taxes. This is a thing that we all have to pay to the federal government based on our income, based on how much money we make, based on what your tax bracket is. It's also based on what your business structure is. And all your business structure, all of you guys have a different type of business structure. So your taxes is based on what that is, whether you're an LLC, whether you're a partnership, and the taxes, the income flows through to the personal and you pay taxes there, whether you're a corporation, whether you're an S corporation, depending on your business structure is how you pay these income taxes, whether you pay it or whether the business pay it like a corporation who pays their own. Okay, so we're going to make that clear. The thing about paying your income taxes, guys, the idea is to get to taxable income. So what happens is, you make money, you have your gross receipts. So however much money your business make, if your business make $500,000, that's called your gross receipts. What happened once you get to the gross receipts, and this is what everybody really loves that's in business, you get to write off all of your business deductions. These are expenses. These are the things that you spend money on in order for you to make money. So your business expenses, business deduction, things like advertising, things like your marketing expenses, things like your rent, your utilities, right? Salaries and wages you pay to employees. These are business deductions. We're talking about income taxes, and it's based on your taxable income. So again, if you make $500,000, you do not want to pay taxes on $500,000. You want to pay taxes on what's left after you pay your expenses. So all those expenses, automobile expenses, like I said, travel, anything that is affecting the bottom line must be deducted from your gross revenue, guys. Make sure that you do this. And this is why a lot of people pay taxes they don't have to pay, because they do not know what it is that they could deduct. And so at the end of the day, they wind up paying more taxes than they should. Okay, so the income taxes, you do not want to pay the federal government any more money than you have to. Okay, so make sure all your tax deduction, computer, equipment, everything that you purchase, everything that you pay for, all of your advertising, all of that stuff, you make sure that you deduct it from your gross revenue so you can get to a place that is called the taxable income. This is your net profit. This is the money that you're going to pay federal government taxes on. And we want to make sure that that amount is exactly what it needs to be, no more than you have to, because this is where all the taxes that you have to pay the government comes into play. It's at a different tax rate, different tax bracket based on how much money you pay. So don't be confused, guys. Income taxes is what it is. You pay taxes on your income. If you're self-employed or you're in any type of business, you pay taxes on the taxable income that you make within that business, which is the net taxes, the net income after you deduct all of your expenses. Keep that in mind. Make that clear. If you have a job, you pay income taxes on the income that you make. If you're self-employed, you pay taxes on the profits that you make. If you run any other type of corporation, you pay taxes on the taxable income. All right, get that clear. And I want to make sure that you guys understand this, because I'm going to talk about 2 other types of taxes. I have people calling all day long. They don't know why they have to pay these other taxes if they already paid tax, their income taxes. Income taxes, totally separate what you pay to the federal government. Okay. All right. So, and the thing about the federal government income taxes, it's a pay as you go system. What that means is as you make the money, they want their taxes. So if you have a job, you notice when you get paid, they take out those taxes. If you're self-employed, you have to pay those taxes. Now you have to make some estimated tax payments to the government. Now, what I have a lot of times is people who, when they file their taxes in April and they pay the taxes if they owe anything there after they deduct all of their business expenses, and now they have taxable income and they pay, what happens there is they may still be charged a late paying penalty. And most people don't understand this. They don't know why. They say, if I file on April 15th, why am I still paying late payment taxes? And again, I try to explain this so many times. It's so hard to understand. This is because you file your taxes on time. However, the federal income tax system, again, is a pay as you go. I mean, as you make the money, you have to pay in. So if you're self-employed and you make money, they don't know what you make, you have to estimate what your taxable income is going to be and send them estimated tax payment as you go along every 3 months. So at the end of the year, when you file, they already have some money from you if you're going to owe them, right? So guys, make sure that you understand this. A lot of people pay late payment penalty because they simply don't understand they have to pay in before they file. Just like your payroll check, they take that money out every time you get paid, every week, every 2 weeks, whatever that is, that money comes out. Same thing with your self-employment, same thing with your other type of business, corporation, and everything else. Okay, that's the income taxes. Goes to the federal government. That's it. And you pay only on taxable income. So thank you guys for jumping on here. Hi, Rod. Hi, sis. How are you? Hey, Lorna Smith. Thank you for the hearts. Thanks for the love. Appreciate that. Risha, Utah. Good afternoon, Miss Elaine. Good afternoon, Risha. Thanks for jumping in. Laverne Smith. Hi, sis. How are you? Hey, Joan. Good afternoon, Miss Proby. How are you doing? Thanks for jumping in, guys. Hit like and share on this video. We're talking about 3 tax implications for your business. Again, I usually talk about stuff that affects you as an individual. Sometimes, a lot of times, we're working as self-employed businesses as well. Okay, so that's the first point, income taxes for the federal government. Second point today, guys, is called the employment taxes. And this is, I'm referring to it as payroll taxes. If you guys have employees, it doesn't matter if it's 1 person working for you or 100 people working for you. If you have employees that you hire, you have an obligation to deduct taxes from these folks' paychecks, right? These are called the payroll taxes. You have to deduct these taxes from their payroll checks. You guys have worked before. If you haven't, if you're self-employed now, you've seen they deduct taxes from you. The employer has an obligation to deduct those taxes, and they have to file a payroll tax return forms, and then they must pay in those taxes, those employment taxes. They got to pay them into the government. You have an obligation to make sure that this happens, right? Employment taxes, payroll taxes, as we call it. So as a business owner, make sure if you employ anybody as an employee on your payroll, you have an obligation to make sure you deduct those payroll taxes from them so that you can send it off to the federal government. Some of those taxes, the taxes that you have to deduct is Social Security taxes. You have to deduct Medicare taxes from them, and you got to deduct the federal income taxes. This is all based on their dependents, how much they got. You have to deduct these taxes from the employee checks and send them into the government, right? Now, I have a problem with people at the end of the year. They figure they pay in all these taxes and they feel they need to be getting this back on a refund. And I try to explain that your Social Security taxes that came out of those checks is going to go into the Social Security pot. And when you get to that age, 62, you get to pull some of that money out, right? So that's what happens to those Social Security taxes. It's not a part of your taxable refund. You do not get Social Security taxes back as a refund, guys. And I again have to explain this to everyone. You don't get that back as a refund. Medicare taxes, it goes there when you get to that age. You get Medicare benefits. You do not get that back as a refund on your check. So for employers, they payroll taxes you deduct, which is Social Security. Guys, you as employees do not get to file and get a refund on that money. You do not get to get a refund on the Medicare taxes. The only tax that gets a refund back to you if you pay too much is the federal withholding taxes. Okay, so that's the only taxes that if you paid in too much, if you have deductions, you know, you're writing off things on your Schedule A Medicare, or if you medical expenses, if you own a property, mortgage interest, property taxes, any other implications that will reduce your taxable income, you can then get a refund on those federal tax withholding. That's it. You don't get it back on Social Security. You don't get it back in Medicare. Later on, you get those benefits. And before you know it, you know, who knows, you'll be 62 and be needing those benefits later. Okay, so as an employer, you have an obligation to deduct those taxes and pay them in. And also, you must match Social Security taxes and Medicare taxes, and the other tax that an employer pay is called the federal unemployment tax. You have to pay that as an employer on behalf of your employees, so that when they're unemployed, they can get either money from the state or the federal for unemployment. This is the employment tax section. I don't want to make it any more complicated, but you got to understand these things. And it's so hard. Most people ask these questions over and over, and I'm trying to always make sure that I can explain it enough so you get it. Margaret Ben say, good afternoon. What if you are working and you don't pay taxes? What if you are working and you don't pay taxes? Now, some people, based on their tax bracket, how much money they make, how many dependents they put on those forms, they may not deduct any federal taxes from you because you won't have a tax liability at the end. So for instance, if you don't make a lot of money, let's say, and you have enough, too many dependents, and they don't deduct, because the tax bracket, let me explain this, the tax bracket is based on your income, and it's based on your withholding, meaning how many dependents, how many withholdings that you have. And it's already structured by the federal government. So if you make a certain amount of money and you fall into a bracket where, because you are not in the bracket where it's taxable income, nothing will come out of your payroll check for federal withholding, right? So some people may look at their payroll check, see nothing for the federal withholding, so you're not paying any taxes there. And at the end of the year, when you filed, because of the amount of money that you make, and because of the dependents that you may have and other write-offs, you may not have to pay any taxes, and you probably won't owe any taxes. So yes, it's possible you could be working and they wouldn't have to pay any taxes because of the bracket that you fall in. Okay, so keep that in mind. Now, if you are working though, Margaret, there's a mandatory taxes that has to come out of your check. The ones I talk about, Social Security and Medicare, that has to come out of your payroll check no matter what. If you are working and you are an employee, those taxes have to come out. Again, those are taxes that you get later on when you file Social Security and when you file Medicare. But your federal income taxes may not come out at all, depending on the tax bracket and how much money you make, how many dependents that you claim. Okay, so that's the employment taxes, guys. So make sure that you try to understand that when you look at your payroll checks, make sure that you understand those taxes on there. And there's only one that you could get back as a refund if they take too much is the federal withholding, right? So hopefully that is clear. Hi, Anya. Hey, Mom T. How are you? All right, guys, hit like and share on this video. We're talking about 3 tax implications for your business. Again, I always try to tie this into the individual as well, because a lot of us are either self-employed and or a combination of both. You might be an employee and also being self-employed or running a business operation totally separate as an LLC or any other corporations. Okay, so 3 points we're making today. And the third point, this one right here, I get so many questions on. And the third point today, guys, is sales taxes. Okay, sales taxes. Now, I've just had the question this week. People wants to know why they're paying sales taxes if they already paid income taxes. These are different type of taxes for different reasons. If you are a retailer, guys, if you are selling anything in the state of California, you have to be registered with the California Department of Tax and Fee, formerly known as State Board of Equalization, to get a certificate in order for you to sell and to collect sales taxes on their behalf, right? You guys know the story. When you go out and you buy something, they say, oh, it's $20 plus tax, or it's $50 plus tax, so the thing becomes $55. That's sales taxes. As a business, you have an obligation to collect those sales taxes. You have to file a sales tax return, and you must pay those sales taxes into the state of California. It's just that simple now. I just had a client the other day that says, why am I paying sales taxes? And I just paid my income taxes. They're two different things. Keep in mind, the sales taxes is monies you collect from the retailers. You're retailing, the people who is buying on the other end, the end user, they pay you that money. You have to send that to the to the state. It's not yours. It's not a part of your sales. All right. So keep in mind, guys, if you're selling any type of merchandise, anything that is you're collecting sales taxes from, there's major implications if you do not collect that money and send it into the state. That's the sales taxes. And we on the other user end, we know what that is. If we're not selling anything, we have paid enough sales taxes on merchandise that we have purchased. Okay. So that's what the sales taxes is. So everybody that is in that business must collect the sales taxes and must pay the sales taxes in. Sales taxes rates are different based on whatever county you're in, based on whatever city. In LA, you pay 9.5% on sales taxes, and then you can just go down the street to Inglewood and you're paying 10% on sales taxes, right? Or you can drive out to the Inland Empire and you can pay 7.5% on sales taxes. So depending on the county, depending on the city, those taxes are different, but you must pay them on any items that is taxable. And as a business owner, you have to file a return. Sales tax return is called, and you must send that money to the state. All right, are they gonna come looking for you? I know, Miss Sharon, thanks for jumping on here. Oh, Margaret said, what if you got paid cash? Well, Margaret, if you got paid cash, that means that they don't have you on a payroll system, because if you were on a payroll system, they would end up taking out those taxes and they would be writing you a check. So, but if it's cash, then it's probably not on the payroll system. So they're not deducting any taxes. And if that is the case, then you are responsible for your own taxes. So you need to know how much money you're making, and you have to pay your own personal taxes in, because you have an obligation. If you're being paid directly, that means they're being paid as an independent person, and you are responsible to make payments on your own taxes, right? So you have to file what you make. The government wants you to file based on how much income you make, and whatever your deductions are, whatever expenses are that you can write off, and what's left, they're expecting you to pay taxes on that, right? So you're obligated to pay your own taxes in that case. All righty. So let me recap these 3 tax implications for your business, guys. The first one is income taxes. The federal government income taxes based on your taxable income, pay-as-you-go system. If you're self-employed, you're running and operating a business, as you make money, you have to project what you're going to owe them. They want money in advance. After your gross revenue, you take all the necessary deductions, everything that you can write off, and then you get the taxable income, figure out what your taxes are based on the tax bracket, and then send them estimated payments, right? This is what you want to do. This will save you penalty from filing and paying in the end, right? First point, income tax. Second one is employment taxes. And this is if you are an employee, guys. Anyone that's hiring any employees, you have an obligation to deduct those payroll taxes. You have to. And let me tell you something. If you don't deduct Social Security and Medicare taxes from your employees, as an employer, you have to pay them yourself. They're going to come out of your pocket. Because when you file the payroll tax form, you have to pay the total that it's asking you for. So if you did not take it out of the employee's taxes, you're going to have to pay it out of pocket. And again, as an employer, you have an obligation to match their Medicare taxes. You have an obligation to match the Social Security taxes, and you have to pay federal unemployment for all of your employees. So if they need federal unemployment, which is subsidized, if the state unemployment runs out, you have federal unemployment as well. This is an obligation for all employers. So that's the employment or payroll tax section. And the third one is those sales taxes, those mighty sales taxes that we pay on everything that we buy. And you as a retailer, you as anyone in business selling a taxable merchandise, you must file a sales tax return separately, send it to the state of California Department of Tax and Fee, and send them all them sales tax dollars that you collected, because they're not yours. They'll hold you responsible for getting those taxes in. When you sell your item, the sale of that item belongs to you, but the taxes you collect is not yours. You got to file the sales taxes and send them in, all right? So that's my 3-point today. So Risha said great information, like always. Thank you so much. Norman Strong, thanks for jumping on here. Love the fire. All right. Okay, guys, so that covers those 3 points today. Again, I wanted to remind you guys, go to elainesdesk.com. Go to elainesdesk.com. There's so much information there for those of you who haven't started your business, who have started, who wants to take the business to the next level. There's a lot of information there. There's a whole free webinar that's on there. There's a course that's on there. You guys can go there and learn how to get your business started, how to get it to the next level, the things that you need to do to make it work. You know, I've been running, operating my business, and I know this just sounds crazy, but next year will be like 40 years. Oh my goodness. You know, I kept saying 35. I like that number better. All of this time I've been in business, running and operating this business. And so there's a lot of stuff that I can pass on to you guys. I want to see everybody succeed. And for sure, you get out of it what you put into it. This is what I keep saying. So go to elainesdesk.com. There's a lot of information there. And if you need any further clarification, guys, make sure that you get online. Go to PROBY'S.com, book yourself a free 15-minute consultation. If you're a little confused about something, financial, personal, otherwise, taxes, any of that good stuff, go to PROBY'S.com. There's a calendar there. Book yourself 15-minute free consultation. I'll be happy to help you with that process. I'm sure I can help you through the process. And again, like I said, there's a whole lot over the years that, you know, I figured out. So you guys go there, book yourself a free consultation, or call the office at 323-290-9034. If you need to get your entity formed, partnership, corporation, whatever that might be, and or accounting done for your business, taxes, payroll, any of that good stuff, we can take care of that for you. PROBY'S Tax and Accounting. We have a lot of qualified personnel there that can take care of all that stuff for you guys. And I'm excited about this one. We're going to have another business mixer. This is scheduled for July. I think it's July the 20th. We're going to put that information out. So stay tuned for that information. Another good business mixture. A lot of great information, guys, so we can take our business to the next level. Look, there's a lot of money out there for everybody. Let's go out there and get ours, okay? We say 2023 is our year. We're going to make sure that that happens. So let's go on and get it, okay? So Diane Branch, thanks for jumping on here. Late signing in. We'll catch up then the replay. Thank you so much. All right. Great, great, great. Okay. Lerner Smith said, thanks for sharing. So you guys, again, hit like and share in this video. Again, let all your friends get this information. Great information here. Let's just go to the next level. Let's just get what's ours out there. Okay. So there's a lot of money that we can get. And the main thing is taxes. Tax implications, we need to know what that is, and we gotta save on taxes. Like they said, the tax code is there, but if you don't know it and you don't know what to do, you will pay unnecessary money. Don't make your money and then give it all back to the government, right? We don't want to do that. So on Thursday, we're going to talk about 3 strategies for setting a SMART goals, SMART goals. So we're going to talk about S, the M, the A, the R, and the T. That sounds good to me. All right, so that rhymes. So with that said, guys, I think that covers it, right? So that's it. Okay, so with that said, guys, I want you guys to have a wonderful rest of your Tuesday afternoon. I'll see you guys right back here on Thursday. Hit like and share this video. And with that said, y'all take care of each other and take care of yourself. All right.